What's up, everybody? Welcome back to our usual daily recap on gold, Bitcoin, and euro dollar. Today is the 2nd of September and it's currently market close, so it's 11 p.m. European time. We're going to start as usual from our main pair, which is gold. And as you can see, it's really messy, but as per previous analysis, we are currently in this big range or the block between 1820-ish and 1807-ish, waiting for the NFP coming in tomorrow. We might see a liquidity grab at this level to then continue up if the job data is bad, or we might see a liquidity grab on the upside and then continuation down if the jobs sectors are bouncing and rebounding as expected. So this today's analysis was exactly to play between these key levels. Let's jump on the 1 minute time frame. As you can see, what we saw was coming from the Asian session. We were below 1812.5 key level, which will be today's main point of reference, as well with 1817. As you can see, we started almost in pre-Eurozone open, sorry. We got a break and retest on the dot of 1812.5, giving you a scalp, quick scalp, like 30 pips of scalp with, of course, more of a medium risk entry and having here a safer entry, sorry, a risk reward entry when we saw price making a double bottom and failing to close below. After that, what we saw was some ranging. We got our London open, traveling up at the key level, and you can see a double bottom giving you high risk, high reward entries here. Let me mark them up in green, because of course the main bias was bullish and we were waiting for the confirms at specific price sensitivity areas and the key levels for price to continue up. Okay, as you can see here, then we went and we touched price sensitivity area 1817, which has been in the last few days a huge price sensitivity area where price actually reacted and many times got rejected as well. Okay, as you can see now, price gave us high risk high reward entry at the double bottom at key level, so many confluence, many confirmations. Let's try to see if we had some intermediate price point, because as you can see here, price didn't actually break above, so you got like your 30 pips again eventually, but didn't actually break above this price sensitivity area up until 3 times. Then we got another block being created at these lows, and then continuation up. Safest entries, actually, if you want to take a safe entry, was only above these other block highs, either here or safer here, because if you enter here, you gotta give a nice stop loss, which is not ideal if you see the size of the stop loss versus the reward. it's like 2 to 1. Yeah, it's nice, but it's not. It might even stop here, might stop here, and then go back down. Gold does it very often. So we got our high risk high reward entry. I wouldn't consider actually safer entries for this second scalp, but very important to see. Okay, the flat body candles here for price to continue up. This is not any price sensitivity area, but then what we see is 1, 2, 3 attempts to break above the price sensitivity area, and as we know, we get a failure to break setup, a last attempt, and then continuation down, reacting here very quickly at these lows, giving you safer entries exactly here when price broke and retested the PSA. I just got one entry, hidden risk entry over here. Then, as you can see, what I was telling you about here, that if you enter above this line, might have price just traveled 10 pips, is the same that happened here. You see, you have a medium risk entry, yes, but it's not going all the way back to the key level. Doesn't always happen. But then you see price reacting, again break and retest of these same price points. Looks like it gives you very good momentum, but it stops here at these previous lows, as you can see. Previous lows and previous price sensitivity area on the left hand side. If you already had charted this line for these highs and these lows, you have the same line charted here, giving you medium risk, high risk high reward entry, failure to break as a setup. There you go. There you see huge rejection. You see here a last attempt. Where does this candle go? Exactly at these previous lows, exactly on the dot. And then very impulsively, even gives you a retest of these previous lows on the left, if you want to be extra safe. Let me just put here medium risk entry, safer entry, giving you retest of the key level, and then continuation down for like 30 pips, then aggressive rebound above the key level, again below, and then here you have exactly here you have New York Stock Exchange open, $30-minute top wick, and then this one is giving you a setup to take further scalp sells, because the new one 30-minute candle, yeah, traveling makes the top wick, but is failing to break below above the key level of going back into the range, and gives you a nice other 30 pips scalp, still reacting at these previous lows, more or less, of course, bouncing back up, failing to make new highs again, and then very impulsively below here. Okay, so you might be wondering why from here the bias was bullish and now you are taking all these sells, because around here 230 we had weekly better than expect. No, let me put in yellow. Better than expected which gives you, of course, a nice and bearish trend on gold. That's why the shift of the bias. Here I'm missing one PSA, as you can see. Yes, this one, 1807. Very good. This was a pre-charted PSA. It's very important because, as you can see, we create a double bottom, break and retest of this price sensitivity area, failing to break previous lows. Then what you get is pretty clean price action. Look, break, reaction at these highs, retest on the dot of the pre-charted price sensitivity area, giving you nice scalp, reacting again exactly at these previous highs, and then closing back below. Let me just put the risk reward entry, break and retest PSA, and here, as you can see, we had the key level and we get a break below and a retest. High risk high reward entry, if you want medium risk entries, just pull the price sensitivity area on the left hand side and see a break or retest, which happens here. Very good. And then, as you can see, continuation down. Yes, we have some reaction on the dot. As you can see, we have some reaction. And then we'll keep printing lower highs and lower lows until we reach again on the dot, exactly on the dot, this same price sensitivity area. And since then, volume dying, and then we're just, yes, reacting at these previous price sensitivity areas. As you can see, all the same. Nothing special. So you can see here, reacting at these previous lows, but then just ranging. Okay, so this is it for gold. And we are going to do now Bitcoin. This morning we were here and we were expecting reactions. We saw yesterday bullish push above this wedge being created, reaction at the previous price sensitivity area and key level, below again pre-charted levels, above reaction in previous highs. Very, let me just point that out. As you can see on the left hand side, on the left hand side, 50-50 on the left hand side again. Since then we are sort of chugging away. As you can see, analysis from the morning played out quite exactly as expected, with huge rejection at 50-50, which it was this last previous highs, as you can see. Let's go on the 1 minute chart, shall we? Yes, we shall. Okay, let's go here. Starting always, now we are starting from Eurozone open. We have a reaction at the key level 49,500, giving you immediately. Let me just put it a little bit back. Sort of messy due to this feed, but as you can see, first bounce, reaction, break below, retest of the PPL, giving you high risk, high reward entries, safer entry above these previous highs. You see that price reacts always and goes to the next PPL. Then what do we have? We have a reaction exactly at these previous highs. Continuation up, break a retest of the PPL again, and then very impulsive bullish move, as you can see here, giving you risk reward entry, medium risk entry, safer entry, safest entry. Okay, I know already that this one will be okay, so I give you safer entry, a little bit above. Okay. Then you can see a very strong reaction, a rejection from this level, whatever the price point is, which is actually, as you can see, it was already charted out because it's the highs, 419, this previous candle body closures highs. Which was almost on the dot. Okay. There you go. And we got, okay, that's what I moved this, safer entry. We got a huge rejection in this price sensitivity area. But anyway, always you see the small bullish candle here. Always price gives you second opportunities. Reacting, retesting these previous lows. If you miss this move, okay, you missed some pips, but at least now you have much safer entry. Break, retest of the PPL, and then another leg down to revisit exactly the previous price sensitivity area on the left hand side. Okay, so here, I guess this is not a candle closer. Let's see, it closed 39,721. Exactly, it closed. Yeah, got rejected exactly this price sensitivity, price level, exactly on the dot. Let me just chart the entry, the entry, safer, just safer. Okay. Then you see reaction again, creating a double bottom, these previous lows, giving you another bullish opportunity, scalps, safer entries above these previous highs. Here, retest of the key level, and then more bullish impulsive action. If you're wondering how many pips each one of these is, even the safer is 24 pips. From the bottom, it's like 50 pips. So even if you enter at the safest, safer, medium risk, high risk entry. Even if you miss the first one, even if you're not that sure about it, always have a second and sometimes even third opportunities to enter. Just clean this. Oh, scheiße. Okay. I want you to be cleaner. Okay. Around here, not very clean, but it's a break and retest. You trust me. Then you get a pullback. Again, failing to make new highs, reacting at these previous highs on the left hand side, and then continuation down. Retest of the PPL. Again, reacting at these same lows. Very good. Creating another block. As you can see, impulsive move up. No clear signs of anyone in control. You have another move up above the price sensitivity area if you want to take it. Again, failing to break. But then last push reacting at these exactly same highs, giving you impulsive rejection. Retest top of the PPL. Again, as short pullback reacting at these previous lows. And then continuation down here. There you go. Still failing to break below these previous lows. Okay, then you have some, yes, resistance against the PPL. You have a break and retest, break and retest again. If you want to take buy scalps, you have the opportunity with a clean break and retest after getting rejected at these previous lows. You might have enough juice. Pick scalps. Let me just put those buys. Reward entry, safer entry here, some more. As you can see, some reaction again at these previous highs on the left hand side. At this stage, you already have here all the price points already charted. The trend, the horizontal lines are already there. It's not like you're adding them to make something work for you. They're already there from the morning. Now I don't even see where the line finished, but you get the point here. And you keep chugging away. You have a very aggressive push. Where does it stop? Exactly at this level to give you another push up. Where is it reacting? Again, exactly the same exact price point, giving you high risk, high reward entries. And then again, even after such an impulsive move, you missed it. Okay, it's fine, no worries. Yes, you have maybe a safer entry at the retest of this high. Let me chart it. Okay, you have a shorter pullback. You have many entries. Look at here. Look at here how picture perfect it is. Okay, and then you have the impulsive move down. But look here how many opportunities you have. You have the risk reward entry if you are monitoring this price point, this one. You already know that is a very strong resistance. Then what do you have? You have here, you have this price point charted from the morning. Not really true, but maybe you consider these price points and you have a medium risk entry. I'm not going to say safe, I'm not going to say that. Then you have a tap a little bit below of the key level, price in PPL, bounce back up. Where does it stop? At these lows. And this is very clear. This was the bottom of the order block. And then what you have more? So you have, I will say medium risk entry because you are just above the key level slash PPL, but then you have a break, retest of PPL, safer entry. Then what do you have below? It's crazy. Isn't crazy? For me, it is. So you have here safest entry. This to me it's absolutely crazy because now you see the safest where it is here. You just go from here, and I know, okay, I already know that it will later on give a reaction, so I just draw a line, follow my arrow, boom. This price sensitivity area on the left hand side. There it is, not on the dot. Basically for the last one, yes. And you get safest entry. Crazy, crazy, crazy stuff. And I will just say that then we ranged reacting at those lows. Let me just fix this. Tack, tack. here. Crazy stuff. This it was not even the close, I guess, because the next candle opened much higher. So it's just crazy how good all this price action is, and how many times price during the day reacts at these same price points. So this is it for Bitcoin, and we're going to grab our last pair with EuroDollar, which is much similar to gold in this period, going against the dollar. We didn't have any important news today, apart from the weekly jobless claims as well that was we played for gold. And as you can see, the being bad, being worse than expected, gave almost 40 pips of dollar weakness on the upside above key levels and price sensitivity areas as well. So let me just 18,541. Okay, then above, nothing above because it was not charted, and we had 1840 key level exactly. Okay, so let's go. These eyes, we don't care. Let's go from pre-London as always. We're coming from already break and retest of the key level, giving you already the buys above above the key level 1.184. Tan here, sorry, tan. With every skyward entry. Again, you want to wait. Now I give you a deeper analysis. You have break and retest coming at London Open. You have the last retest and then the continuation up, as you can see. Okay, so let's see these two different opportunities. Now here is I analyze is high risk reward entry. Why? Because we were like 10 minutes before the candle, the Eurozone open candle, which we know that if we are here above the key level, we can have a pullback. See if the key level holds, and if it's, the retest is good on the dot, then you can have a safer entry, because you already let the hourly candle make its top weak, grab liquidity, and then in the opposite side, candle open. So now you have this candle closing. Let's see this. The new candle is opening. You want to create a top wick, a lower wick, which will be equal to be like this. In this moment is bearish, to then turn with an arrow bullish in continuation of the trend. But of course, you don't want this wick over here you don't want this wick to dip. If the key level is here, you don't want to dip too much below. you want it to revisit and retest exactly this key level on the downside. And this is what happened exactly here. You let the candle make the lower wick and then continuation up. If you want to see it exactly, this is the lower wick, and this is then, of course, the start of the new hourly candle, giving you, I would say, even medium risk entry. But again, same concept, London open. Here, you let the hourly candle, after seeing that Eurozone by itself was not giving you enough momentum, because you saw a reaction here at the price sensitivity area, the previous highs, you have another opportunities to let the 9 a.m. hourly candle make the lower wick and then continuation up, giving you, in my opinion, safer entry. Again, at the same level, just knowing the timing of the session, of the hours, the hours that make some difference and the ones that don't. You get a rejection. This is already 10, 15 pips above the key level, giving you a stop loss, minimum stop loss. Then you see price sort of correcting, then reacting again at this same price sensitivity area, reacting again at these same highs, creating a sort of order block. Again, tapping again the bottom of the order block, creating higher lows, reacting again at these previous highs, reacting again at these previous highs, making a new higher low and then breaking up. Now here you are at a strong, already charted resistance, you're already the previous highs, sorry. So you don't enter here because it's very, very short range. So you just wait, you see, okay, let's see if price breaks above, retest, and then continuation up. It didn't because it got rejected, tapping previous lows, again rejected. This is, remember, this is not gold. Yes, as you can see, a weaker tap gives you a bearish impulse, but it's just a matter of few pips. Better to stay on the sideline and wait for clear New York price action. As you can see, very, very bullish, but still not closing very strong above. And then, as you can see, many taps the price sensitivity area failing to break above again and again. This is, of course, because at in half an hour from here we have the news, the report, so don't expect breaking above either this price sensitivity area or either the key level. You see now coming the news, you see a sort of here reaction, the news come, you see a liquidity grab exactly at the key level, and then of course the news are bad for the dollar, and what you can see is a break, a retest of the key level, break retest of these previous lows, highs, another block being created at this huge price sensitivity area on the left hand side, tap with reaction of the price sensitivity area, and then you have the break retest of the PSA. Now we have here you have fundamental reasons, fundamental confirms for price to break above, not like here in New York. So you had a risk reward entry, and a much safer entry. Of course, you are missing 10-15 pips to get like 8-9 pips from this move. Okay. Like this, we have a reaction here. Now this is, of course, this is not a level. Just put it later, so doesn't matter. We have a reaction, getting to make new highs. Dip below, still reacting at this price sensitivity area on the left hand side. Trying to break above the PSA, failing, but still making a double bottom. So this gives you double bottom, a possible buy setup. If this is too high risk, why is it too high risk? Because you are not in any, you're not here, you're not at a price sensitivity area like here, so you're just in the middle of something. You wait for the break, retest, break, retest, and then continuation up. You wait. For you, this is too scary, but see what price does. Break, retest, again, of what? What is, now where is this double bottom? Oops, exactly at the same previous highs. There you go. Continuation up, retest of this previous price sensitivity area, previous highs, and then spike up. So you got nice one entry, safer entry, safest entry as well. You have many opportunities to enter. From there, you have a rejection, you have a retest multiple times of this price sensitivity area on the left hand side, dip below, but you see that buyers are coming in at this PSA, not even coming to the full to retest the price sensitivity area, and from there you just very slowly, I gotta say, chugging away. Reaction, you see this reaction is not casual, it's because of this price sensitivity area on the left hand side. Yes, indeed, it's a bullish trend, but it's very, very sloppy, and it's coming from where? Where would you enter? Which price points? Yeah, you can say these price points. You can, to me, this is not a clear setup that you could have taken advantage of. So this is it for today. See you guys tomorrow after NFP.